Hi guys, I'm going to tell about Sea Limited Q1 earnings call. I'm going to be looking at the earnings report, showing you the numbers, but just first a short overview of Sea Limited. For those of you not so familiar with the company, Sea Limited is three companies working together. Founded from the same company. They've got an e-commerce arm, which is called Shopee, dominating in Southeast Asia. Their revenue was 2.7 billion in this quarter in Shopee. Then they've got a financial platform, digital financial services. They got e-wallet, they got loans, they got buy now, pay later. They got all the stuff that you know from modern digital finance platforms. Um, Started somewhat later, and revenue is 500 million. When you want to think about how interesting digital financial services are, you should look for Mercado Libre, because their Mercado Pago has been a very big part of their growth the past years. Sea Limited is just a couple of years behind Mercado Libre in the development. Then they've got digital entertainment which is the gaming business, and that's actually the first business of Sea Limited. This is where they come from, and you actually see that in their e-commerce products that they are gamifying things. But here you get a sense of what the big part of the business is. It's the e-commerce business now. Fintech is growing a lot, digital entertainment not growing a lot. Just two words about me. I am the founder and fund manager of NewDeal Invest investment fund. We have our investment process, which is about tech stocks, investing in them in the correct way, which is broad portfolios, and then a lot of focus on technology and the future prospects of the company, and a lot of companies, and a lot of focus on variation, because that's a big part of investing in tech stocks. So if you want a good AI exposure, we should be a really relevant place to look. We got three distribution channels. We got eToro, where we have the NDI Future Tech portfolio for all of eToro platforms users. We've got a public listed fund in Denmark. The ticker is PMI NDI, and the ISIN code is sometimes needed to find it on your web bank. There's no minimum investment here. Minimum investment here is $500. And then we have the unlisted main fund, where you have the minimum investment of 100,000 euros. Now, from here, I'd like to go over to the earnings report and take a look at that, and I'll go through some of the key things to understand when you're trying to understand Sea Limited earnings report. So first of all, when we look at the e-commerce business, then then GMV is extremely strong this quarter, growing by 36%, which is very, very high, and very, very strong. Usually when GMV grows, then you'll see revenue growing a lot more, because the take rate is increasing. You're simply adding on services for your existing customers over time, and that creates value for them, and then you start monetizing that. And when the flywheel really starts moving, then you might not need to advertise so much or intensively anymore when the value proposition for customers increases. So so revenue, and the last bit I said was really about gross profit, but revenue should typically grow more than GMV, and gross profits should grow even more, and because of scale advantages. And yeah, we're not seeing that in this quarter, but there's a lot to the revenue stream, so I'll break that down here. So if we go to GAAP revenue of the e-commerce Shopee business, then it's 2.4 billion. And GAAP revenue, you divide into core marketplace revenue and value-added services revenue. And core marketplace revenue, that's your advertising income, that's your fees that you charge the sellers. So this is really what the Shopee platform is about. It's the core marketplace revenue, and that's the thing to look for to grow. And then you have, so that's 1.7 billion, and it's growing 47%. Now, if you look in the past quarters where growth was not so high, you'd still be seeing the core marketplace revenue just ramping and growing a lot. So this is the key number for Sea Limited. That's the core marketplace revenue. And it's also very interesting because this is high margin. This is really, really high margin. Here, Shopee is a software as a service company selling to online merchants, and it's an advertising company selling ads to advertisers. So it's high margin, and this is what you need to look for. Then, but GAAP revenue was 2.7 billion. So you have the 1.7 billion here. Then you have the value-added services, the logistics, which is 723 million this quarter, and it's only growing 7.9% here. And that's because one of the ways Shopee is incentivizing new customers is giving free shipping for the first sales, or giving discounts on shipping for new merchants on their platform. So so a lot of the marketing efforts will be in this value-added services, and you'll see that in the report, as value-added services not growing as much as it really would if they were not giving this free shipping, etc. Another thing that makes value-added services not grow so much is the price reductions. Each of the quarters, the past quarters, they've been able to reduce shipping costs for merchants, and that's naturally a drag on their shipping revenues. So I really don't think of value-added services as an interesting part of the business. So I disregard this number when I think about the value of Sea Limited. So it's a great help that management specifies this number, so that otherwise, when you look at GAAP revenue, it's growing 32%, but the core marketplace revenue is growing 7%, and that's because GAAP revenue is core marketplace revenue and value-added services pooled together. And another thing that's in GAAP revenue, which is not seen here, is the 1P business of Sea Limited, or of Shopee, and it's about $300 million. So if you take 300 plus 1.7, that's 2, plus 723, that's 2.7 billion. And then you have the GAAP revenue that you have up here. But only core marketplace revenue is what you want to look for as an investor. The other things, value-added services, is just a necessity that needs to keep the platform growing. And 1P is not something that Sea Limited is trying to grow. It's merely that there are some products which the merchants on the platform are not providing that would be nice for customers to have the optimal selection, and thus Sea Limited or Shopee does it themselves, but they're not trying to grow it. So so in quarters where Sea Limited is ramping up their marketing efforts, the value-added services revenue will fall, and thus revenue will not grow as much. When they make charge less for shipping, that impacts the GAAP revenue negatively, but it does not impact the core marketplace revenue number. So thus, GAAP revenue is underestimating the growth of the core business of Sea Limited because of price reductions in shipping. Yeah. So let's move on to digital financial services. I don't have that much to say about digital financial services. Actually, I was kind of hoping that it would grow a little bit more than the 21%. So this is where my disappointment is in this earnings report. Then moving on to digital entertainment. Now there are two numbers here. There are bookings and there's revenue. Now, bookings is when a player um, 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 puts in some money on Free Fire, then it's bookings. Then it's money that you get right now. So, and revenue is an accounting thing. So all of the money that the user puts on the platform, he might not spend it now, but might spend it in the coming month. So so Garena cannot recognize bookings as revenue, but they have to defer some of the revenues for later. And I've got I've got a graph showing that way better. So when I think about what's interesting, I want to look at bookings. That's what the players are spending on the games in Garena. That's the interesting thing, and it's up 10.8% year on year. Now, if you look at GAAP revenue, then GAAP revenue is actually down from 540 million last year to 458 million this year. And yeah, I guess I'll just show you where to find that in the earnings report, where you can see it. Yeah, yeah, here it is. So here you have digital entertainment here, and then you have the operating loss or income here, and you see that there's been a deferred revenue of 47 million this quarter. That means that it's some of the bookings that is not recognized as revenue. So if you add that to the operating income, then you'd have what they call adjusted EBITDA. And for Garena, adjusted EBITDA is kind of where you use bookings to calculate the earnings. So in this quarter, the earnings, the revenue number and the operating income number is hit by deferred revenue of 47 million. Whereas if you go back a year, then the deferred revenue was a negative 55 million. That means that that revenue had been deferred from previous good quarters to Q1 2023. So that for 1 year ago, operating income was sort of unnaturally higher due to accounting ways than the adjusted EBITDA. So for Garena, adjusted EBITDA is the correct measure, in my opinion, to look at, because there you see how the business is doing right now and avoid the deferred revenue effect on the numbers. And then, yeah, I think those are the the most important things. Then I'll go switch over to some slides I made to illustrate the points I have. So here we have Garena with the bookings, and the bookings is the blue columns, and the revenue is the red columns, and EBITDA is the yellow column. So, and that's the adjusted EBITDA they use. So back in 21, Free Fire was doing really well, and you had more and more money being put in on the platform. Accounting wise, that made the revenue grow 1 quarter more and stay elevated above the bookings numbers, because you had the deferred revenues that kept spilling um, into um, into revenue and EBIT, which is GAAP accounting measures. And yeah. So and now you've actually seen it turn around. You see that bookings have started to grow now again, and that's really, really strong for Garena. But you still see the revenue number falling, and that's because of the deferred revenues. So go for bookings and go for adjusted EBITDA when looking at Garena. And in this quarter, the growth of the total business will be underestimated, because a year ago, um, the revenue in Garena was higher due to accounting measures, deferred revenues that spilled in to this quarter. And in this quarter, the effect is negative the other way around. The other way around. And so when you look at Garena, then the best thing is to look at adjusted EBITDA and not look at GAAP earnings. Yeah. So over to Shopee, and I just wanted to show you the development of the different parts of Shopee. So you have total revenue of Shopee, which is the blue column. It's growing somewhat nicely. Then you have the market revenue, which is the total revenue without product revenue, which is the 1P. You have the 1P here, which is the orange columns. It's just stable. And then you have the core marketplace revenue, the yellow here, which is growing really nicely. And you have the value-added services, the logistics income from the platform, which is stable due to price reductions and due to selling incentives. Yeah, so look for core marketplace revenue. That's the important thing. So in these pies, I divide Sea Limited up into the revenue up into 5 categories. You have some categories which are not attractive. You have the 1P. This one is back to 2021. You have the 1P, which is not attractive. It's the same for Amazon. It's not attractive. It's low margin. It's not growing. Then you have the logistics business, which is also low margin, not supposed to be growing or doing anything material. Then you have the gaming segment, the Garena segment, and Garena, if we're lucky, then Garena will be growing maybe between 10 and 20% yearly from now on. I usually say that I just disregard any growth from Garena when I'm trying to figure out what Sea Limited is worth. And then you have the core marketplace revenue, the green one here, and the financial platform here, revenue-wise. So you can see in 2021, the attractive parts of Sea Limited core marketplace revenue and the financial platform, they were only about a fourth of the total company. And if we look at it today, then we have financial platform here, and we have core marketplace revenue here. So you have that the attractive parts of Sea Limited is actually way more than half of the business right now. And these are high margin businesses that are growing something like 35% combined together. Yeah. So the business has changed over time. The revenue mix has changed to a high margin, fast growing overweight of the business right now. So let's look at part of the sums valuation, because I think that's probably the best. The point about Garena being best evaluated on adjusted EBITDA really underlines that once you go to GAAP revenue, GAAP, you get into problems, because things are working in different directions. Some part of the revenues are not really attractive, so we don't really care if logistics revenue falls or rises, because it's not material for the business. So we need to take it out, not to get confused by it. We don't care if 1P business is growing or shrinking, because it's not material to the business. So we need to disregard it. So, and a good way to do that is to look at part of the sums. And then I actually split it out the same way in revenue streams. So we have gaming here, and it's out in the open what Garena should be valued at. A good often used price for gaming companies is an EV/EBITDA of 12. And I think Garena should probably be one of the most attractive gaming assets out there, because this Southeast Asia is going to be one of the most attractive geographies, and they are dominating there. So an EV/EBITDA of 12 is definitely not being over optimistic or enthusiastic. And the revenue was 292 million, and we just and that's for a quarter. So for a year, it's times 4, and then times 12. Then you have a valuation of 14 billion for Garena. And then I value the digital financial services and core marketplace revenues for themselves. Um, and then I put a price tag of EV to sales of 10 of those two. I think they should have SaaS multiples, because they are they're growing really fast, and they are high margin. So if you put an EV to sales of 10 on them, then you have 499 million plus 1,700 million times 4 quarters a year times the valuation 10, and that's 88 billion. And then you have logistics and 1P, which I just priced at an EV to sales of 1, and it should maybe even be less, but it doesn't matter, because in this way I just value them at 1 billion. And then the total would be 93 billion, and the market cap today is 38 billion. Now, the difference between what I do here and what many people do is that many people pull everything together. So so they end up calculating these parts of the revenue into the valuation of Sea Limited, which is not really giving you an idea of where things are growing, because these parts here will eventually be a larger and larger part of the pie. And that means if you look at the growth on the conglomerate, you should expect accelerating growth, because the high growing parts will be a larger and larger part of the pie. But you lose a lot of precision. So my way is better. And there's a lot of room here. So I think market is very, very focused on the bottom line of the business, and I think you should look at their cash pile, which is growing, so they're generating money. The free cash flow of Sea Limited is a couple of hundred million. No, the operating cash flow is a couple of hundred million dollars. So they are generating cash, and and growth comes at a price. So you cannot grow a business with a growth rate of 40%, and then not invest a lot to do that. Yeah. So I think we're looking at Amazon many years ago, a company where they invested everything they earned to grow more, and investors just want its bottom line and therefore missed the train. That's how I see it. And yeah, if you want to invest with us in NewDeal Invest, you look at our homepage and you can find us at eToro. You can find us at our public listed fund in Denmark, PMI NDI, which is a very broad exposure to tech companies according to our strategy. Or we have the unlisted main fund where the minimum investment is 700,000, no, 100,000 euros. There we have three different portfolios. We have a blockchain portfolio. We also help investing in the more mature tech companies. We have a portfolio focusing on them. There'll be a lot of chip infrastructure, some big tech in it, more mature tech companies. And then we have a very broad portfolio and a concentrated portfolio here. So, and look us up on social media, etc. So thanks for listening to this breakdown of C Limited.